You are looking live. Hello, I'm Rob Helmick, and I'm going to be talking to you about trading today. I'm a former attorney, and I started a couple internet companies. I took one of them public, and the other one I sold. I retired at age 42 about 25 years ago, and ever since then, I've been trading with my beautiful wife, Maria, and we trade stocks and options, although we trade a lot of 0dte SPX. 0dte SPX. We trade about 30,000 a year, 30 to 40. Oh, there it is right above me, 30 to 40,000 every single year, about 150 or so a day. And we're going to talk about that today. On our Sunday show at 5:55 every single Sunday, we talk about what our trades are going to be. Not only do we talk about, I'm going to give you the trades that I'm going to be putting on those accounts. I have two accounts that I trade over the internet in real time. I have a $1 million account, which we started on October 1st, and I think it's up 400 or 500 grand in 5 or 6 months, something like that. And on the other account is a $30,000 account for people with less money. They say, hey, can we show me what we do with a smaller account? Sure, absolutely. And so we do a $30,000 account as well. I'm going to give you all the trades that I actually put on for this entire week. You're going to see them in advance. Again, my attorneys asked me to tell you that this is for entertainment purposes only. Do not follow us. Matter of fact, I'm supposed to even zoom in close when I say this. This is for entertainment purposes only. Do not follow us. It's a lot of fun that I'm having here, but our financial positions might be different. Our risk tolerance might be different. We reserve the right to change our trades and to modify them. We also are going to bunch our trades. We're going to probably do different amounts than you will do. So don't just blindly follow us. Do your own due diligence. You can and may lose all of your money if you follow what we do. But you absolutely can follow along and see everything that we do, and that's okay. You can follow it along. It doesn't mean you have to trade it. You can just follow along. So let's get ready. I'm going to show you this is my personal account here over at Tasty. And you're going to see that what I've got, as you can see, the only thing I've got on is Qs, naked Qs. And I like to do this. This is called the Crazy Ivan trade. And for those of you that don't know, this is a trade that I've been doing, since 2006 or so. It has paid all of our bills. The first year, Maria and I traded options. We made $4 million trading primarily this strategy. We also traded the wheel strategy. That was before backtesting existed. And Maria, as a former banker, she had figured out a way to trade just prior to earnings that was pretty darn successful for about 75 weeks is what that, we were up quite a bit more than that, but we ended up $4 million that first year, which is fine. Started with about $1.8 million and took it up to $7 or $8 million and then ended up around 5.2, I think, or around 6.2, something like that. So, okay. So this market is getting ready to open. I don't know if you can see my little cursor there where we've got 2 minutes to go. I've got two trades on here. The first thing, order of business is I got to get rid of these trades. If we open down, I don't want these trades to get taken. These are Crazy Ivans. This one, you can see it was trading at 206. And so when you sell a put like I'm going to do, I'm saying I want 215, let's call it points for this particular transaction. And they were offering 206. But if we're down a lot, they're going to give me a fill right away. So I'm going to get ready to cancel this bad boy the second the market opens, which is going to be in 1 minute and look like right around 100 seconds. Okay, the chat room is a safe space. Welcome to everybody in the chat room. I see Mario. I see Megan Hank. I see Malachi. I see Tufranc. I see Maria's in there. Hey, how about that? There's Maria and Mario. And I see people, they're talking about Barbie, who's our dog. And we want to see Tyler, my 30-year-old son. He scalps the Qs. You're going to hear him trading quite a bit. We've got 60 seconds to go, 50 seconds to go. I'm guessing it came across my phone. He just finished his dinner, so he's probably licking his splits home. He loves Porsches. I hope he doesn't get a ticket. It's raining like the dickens here in Daytona Beach, but it's beautiful today. And I know everybody wants to see a scalping class by Tyler. Everybody likes the scalping. Tyler does all the young kids, 30-year-olds, Reddit stocks and all that. We got 30 seconds to go. I just want to get this canceled because I don't want to get a fill. The good thing about that, and I'll talk to you a lot about the rules about trading and how the rules can really impact your trading. I'm going to show you how we're up about 134% annual rate of return since October 1st. And I'll show you exactly the types of trades that we do. Maria's better than that. Tyler's just a little bit worse, but not much. All right, so I've got this. You can't see that there's a pop-up window there. You can't see it. 8 seconds to go. I'm going to hit this bad boy the very second that it hits. It is a live auction. Here we go. And Boom, boom, boom. It didn't, let's see if it's, there we go. And I'm going to cancel this one. Boom, canceled. And look at that. It's down, down 78 points. Here we go. Okay, that's great news. We love down days. Down days are fantastic because it gives us an opportunity to go in. Just so we're going to get it out of the way because I don't want people to have to ask and say, what is, there's Moon Trader came into the chat room. Everybody in the chat room is welcome. If you come here, by the way, at 3:30 or 3:25, whatever it is, every single Monday through Friday, 3:30, I believe it is, I will run a poll every day. And we'll open it around 3:30 and we'll close it around 3:45. And then at 3:51, you can tell me whether to sell a put credit spread or a call credit spread. I'll sell a 3-lot for around $200 each, so around $600. So I'm going to win or lose $1,200. You can spend daddy's money. You get to decide. I think the chat, we've done it 6 or 7 days. The chat room is winning like crazy. I love it. I absolutely love it. It's a lot of fun, and we have a lot of fun otherwise, too. And you'll see in real time exactly how I'm doing every single day. People love it when I'm down. Some people love it when I'm up. It's irrelevant to me. But first of all, let's go over the Crazy Ivans. Then we'll go over what I do with the SPX. Then I want to just go through a few slides and show you where we are and why we are where we are. And then I'm going to show you the trades that we're actually going to put on this week. We ought to be out of here in about 15 minutes, maybe a little bit less. So I'm watching this. Look, this market's coming back. Let's see if I can look at a chart here. So it looks like this chart is not that great. I mean, you know, let's say if I just go back there. Okay. So here's what's happening is, let's move this up here. Boom. And we're going to widen this up. So this is a 1 minute chart, and you can see this thing is going back up. So that's not going to, it's going to be great for these positions, you know. Okay. Let's just get this out of the way. Crazy Ivan, what is it? A Crazy Ivan is a naked Q, okay? I go out 45 to 60 days. I like to look at the end of the month, so this one's at 46 days, so it's still good enough for me. I'm going to go ahead and take a look at this, and I'm going to go out 45 days, and I'm going to go ahead and I'm going to take a 12 delta. Always go 12 delta. So I would go right here, and if it was down more, I go ahead and sell this. And what I would do is, notice it's 13,600 buying power, and it brings in about $4,000 in premium. So I would go ahead and sell that. And what I would do normally is, you see the ask right here is $212. So I would probably ask 240, maybe 235, something like that, because I want a little bit more. Now, the reason we call it Crazy Ivan is if it was down 300 points, I'd put out that for 245, let's say. And then I'd say, okay, well, if you're crazy enough to give me 245, how about 255? And if you're crazy enough to do 255, how about 265? And if you're crazy enough to do 265, how about 300 or whatever? I'd stack them, I'd ladder them up, right? And so the idea is that as the market goes down, I get picked off and I can sleep all night. Now, Maria's up all night trading these things in real time. Tyler's scalping them, you know, minute by minute. But I'm sound asleep in my bed because I put on all these Crazy Ivans, and they're going to come through just like troopers. And so then what happens is, if I can get these things to a 25% profit, I'll take them off. And that normally takes about 7 to 14 days. All of these were in the 50% range, and I'm so freaking greedy that I never took them off. But if you want to see kind of the idea of how these have been going, let's take a look at the last 14 days. It gives you a pretty good idea. I can trade. So in my account, in my personal account that I just kind of do for fun, is that this account can sell 65 of them, right? And so I do no more than 30% buying power in these. And the reason you do that is because if it goes down, the broker, no matter who it is, can take your 30% and triple it. So you go from 30 to 90. So I used to trade at 60% buying power, and the market went down 1,000 points, you know, twice in a row or 3 times in a row. I get a phone call from Tasty saying, hey, we need $3 million in 30 minutes, or we're going to start closing out your account. That's called a margin call. You don't ever want to do a margin call because they end up selling at the low. So what I do now is I only use 30% of it at max for my Crazy Ivans. Right now, I'm about 5 or 7%. With these, where I've got 5, 8, 12, 15, 24. I got 24 on now, so I can put on, you know, another 40 or so. But here, this gives you a pretty good idea. Let's scroll down, and you can see that. Let's just look at the Qs only. So you can see here's what I was doing. So I was selling these to open for $220, 240, 260, 242, 260, 265. And then I was buying them back for 184, 118, 137. So you can see I'm selling them for a lot, and then I'm buying them back for way less. Then I'm selling them to open is the reds on in the 300s, 385. Look at that, 385. How about that? That was a crazy one. That's when the market was, there was a war or something going on. I don't really track any of that stuff. I don't really look at the charts or the news or that much stuff anymore. I do on occasion. I don't want to poo-poo it too much, but I don't that much. I just follow this particular trade strategy, and the numbers. It's all about the math for me. I'm a mathematician at heart. This is all math. That's why I love trading. So, okay. So then you can see I was buying to close at 115, 157, 131, and then I'm selling to open now back at 160, 150, 170 because I readjusted where the puts and calls are. So it's pretty straightforward. If the market drops huge, what you do is you're going to go out down there and you're going to suppose the market right now. Pardon me, if the market gets within 250 of my strike price, then I'm going to take some defensive action. So right now it's at 24.5. This one's at 21,750. So I went to a public school. Someone's got to do the math for me. Let's call it $2,500 in round, 2,500 points in round numbers. So if it moved down 22,250, 2250, which is a lot, right? That's 700 times 3-4 days in a row, which is very rarely, if ever, happens. What I would do is I could either just, buy a put, and that would stop the bleeding, or I can roll it down and out. If you don't know what that is, just look on our channel. I got tons and tons and tons of videos about exactly how to do it, okay? So that is, in a nutshell, the Crazy Ivan. We're down 45. Love to see this down 300. I love red days. Red days are the chance for me to sell premium, okay? The whole game, the two trades I do, 0dte SPX. And by the way, people ask me, what are these things up here? These are thumbnails for videos we've done on YouTube. I'd never done a YouTube before October 1st. I never knew anything about this. So Maria and I have made 300 or 400 of these things, and people tend to like them, I guess, for some reason. And so I just have this going through. And if you see anything like, wow, I'd like to see, that video, don't trade earnings, you can find the video on our channel. It's on there, and you can learn all about it. We have a five-part course on everything we do, how we do it, and it shows you exactly how to trade. It's very straight. There's one. That's just as I'm talking about it. So, okay. So now 0dte SPX. What do I do, right? What I do is I backtest every single weekend. Today, it was my backtesting day. And backtesting means that you have some software and it says, what would have happened if I would have traded a particular trade for, a month ago, or for the last month, or the last 6 months, or last 2 years, or whatever. And what I do is, if you've ever seen that movie, This is Spinal Tap, where they say, let's take it to 11. That's what I do. I take it to 11. So what I do is I backtest and I say, well, there are 390 minutes in a trading day, 6.5 hours. And I want to go back 125 trading days, which is 6 months, because that's probably a pretty relevant time period. And I don't want to get too many trades. And I'm going to do I'm going to do two strategies, either a multiple entry iron condor or an exponential moving average to 20 versus the 40. Multiple entry iron condor or exponential moving average, 20 versus the 40. Again, look on our video, the 5-part series, in excruciating detail, shows you exactly what we do, how we do it, defines all those terms. As it scrolls through here, you'll see a picture of it, and I'll identify it for you. It's a 5-part series. It's hard to miss, okay? It's very prominent on the channel, and you can find out everything we do and exactly how we do it, okay? So now, next thing, let's see, by the way, if I have to roll down and out, I typically will roll at 30 to 60 days. I like to get another 1,000 points, 2,000 points is typically when I roll it down and out. Again, I got all kinds of videos about that. So look at that. We made $6 grand in the last 9 minutes on that one. So, okay. So now let me give you the theory. The theory is there's millions of people trading 0dte SPX, is most popular trade. All 0dte SPX are traded. More of those are traded in one day than all others put together, right? Okay, so it's a huge group of people. And these group of people, pretty much, they move in a herd. I'm not going to say they're stupid. I'm going to say they're just not informed, right? They're not fully informed. And they watch people on the internet. I don't want to get into other people on the internet, whether they're good, bad, or indifferent, but they all move like a herd, right? Where they go over here, and then they go over here, and they sell over here, and then they sell over here, and then they sell down here. And so our game is we're doing the same thing they're doing. It's just we don't want to be where they are, right? If they're down here selling for $2, I can sell over here for $4. If they're over here selling for $2, I can sell over here for $4, right? That's the idea. They're selling for 2, I'm selling for 4, right? They're selling for 2, I'm selling for 4, 2, 4. Pretty straightforward, right? We want to sell for more. We get paid a lot more. We're also going to say, let's look at different types of trades, right? It's not only just exponential moving average and multiple entry iron condor. Let's look at different premium targets. So we're going to say, let's target $1.25, $1.50, $1.75, $2, $2.25, and we're going to go on up to say $4. And then we're going to say, well, what about wing width of these multiple entry iron condors? Because we do put credit spreads and call credit spread. An exponential moving average is 1 put credit spread or call credit spread. A multiple entry iron condor is 2. It's a put credit spread and a call credit spread. So we're just selling credit spreads. It's all we're doing. We're doing one thing and one thing only. We're selling credit spreads. That's it. And there's the course I was telling you about, okay? This is the course. You're going to see 5 chapters, a total of 42 minutes. Tyler and I's favorite number, 42, right? Don't ask me why, but every year on Jackie Robinson's birthday, every single baseball player wears 42. In the X-Files, Mulder's apartment is number 42. In Hitchhiker's Guide to the Galaxy, the most important number in the galaxy is 42. Don't ask me why. Okay, so now they're here, we're selling here. They're here, they're selling here. How do we find out where they're selling, right? So what we do is we look at all these premiums. We look at all these wing widths. We look at stop losses, 95%, 200%, 500%, 1,000%, 7, whatever it is, all these different combinations. So then you take 10 combinations of premium, 390, look at that. And that's the face you're going to get when you see this number. 390 minutes in the day, 10 premium combinations, 10 stop loss combinations, 10 wing width combinations, time 125 trading days. That's 97 million trades that we would have to backtest. He's like, 97, how do you keep track of it? We don't. We use some software called Options Omega. That's what and there is the chapter 1 of the thing. Look for that. We do 30,000 of these things a year. Look for that. That's chapter 1 of 5. There's no shame in it. They're real short, and you can watch them over and over and over again. It tells you everything we do. This is a completely transparent channel. We never ask for any money. We're not doing this for the money. We're fine. What we're doing it for is to try and educate traders on what works. Okay, so let's talk. They're selling for 2. We want to sell for 4. Back test 7 million tests. So now what do? We take those back tests, we put them into AI. All the results from the 7, we actually take 97 million, we narrow it down to 7 million. Then we put it into AI. Maria built Vera, who's our AI virtual assistant. And it took her 9 months to build it. Maria's a real smart banker. She understands numbers and all that stuff and AI. And she and Vera worked on a way to come up with what is the best trades, right? So she gives me 250 of the best trades. And she's looking at profit and loss and compound annual growth rate and max drawdown and the MAR and the Sharp and the Cortino and a couple of internal metrics that Maria built, former banker, numbers, a gal. And so I'm not supposed to say gal, my grandkids say, because it's triggers some people. Words I used to use, you can't use anymore, but who knew? So anyway, okay. So now you got this. And then we run it through AI. It kicks out 250. I look at those now, and I look for groupings together and make sure they're not clumping. Put it back in AI. We look at the risk tolerance, and we run that through risk tolerance, because if I have $1 million in the bank and I'm betting $1 million and you got $100 million in the bank and you're betting $1 million, your risk tolerance is much higher than mine. You can afford to lose it all because you got $100 million in the bank. I cannot afford to lose it all because I only got $1 million. And I would look like that gal right there if I lost all my money. So that's what we want to do. So then we come up with the best trades for both the $30,000 account and the $1 million account. And we put those on Sunday night for an entire week. Next week, we start all over again. You say, okay, Rob, tell me how that's worked out. Let's take a quick look at I want a quick look at the chat room. Then we're going to get into it. And we're going to give you the trades. You're going to be out of here in 7 more minutes, 12 more minutes at the longest. Okay. Tyler scalping class. Cheers. Wait till the spread is better as well. In Rob case, you have to roll down how many days. Yes, he looks to roll about 250 points. Maria's got, wow. Whoa, we're getting a little rain today. I can hear it down here in the basement in the studio. Okay, so next thing we got to do is let's take a look at let's take a look at our trades, right? These are the trades for the week. Like I said, we give them out every 5:55 every Sunday. Okay. So since October 1st, we've done 16,113 trades, 105 trading days, 165 calendar days, about 153 trades a day. That's a lot of trades. Our best day was $45,000. Our worst day was $41,000 until Tuesday, when there was a double tweet day when we lost 65,000. For those of you that don't know, the Secretary, Department of Education, who knew we even had that, has a secretary, and he has an assistant, and she has an assistant, and she has an assistant, and he was looking on his phone and not watching CNN. He had it with the phone, the words off, the volume off, and he saw something go across the bottom on CNN that said the U.S. Navy had escorted the first oil tanker through the Strait of Hormuz. He had authority. His job was to text interesting news and to part of the Secretary of Education of Energy, and to put that out. So it comes out from the Secretary of Energy. We just our Navy helped an oil tanker go through the Strait of Hormuz. Well, that was not true. It was a mistaken scroll on CNN. It was saying they would hope to in the future, but they had not done that. And that went out at 10:04. When that went out at 10:04, the market went straight to the upside. All of our calls got taken out, which is a normal occurrence. That's why we don't worry about a market moving one direction. The worst thing is up and down market, the old M&M. When they realized it was wrong, it went 200, 300 points up. So now, because now all the oil problems are over, right? And oil's in everything. So then at 2:04, they realized it was wrong. They took the tweet down, and down goes the market, 300 points to the downside. So now what happens is all the calls get taken out. Worst day ever. Okay, down 65,000. That is the double tweet day, just so you know. All right. So in our $1 million account, we're up $510,000. So what happens? That happens on Tuesday. We own all of our errors here. Okay. I have a whole video about why it's really critical to trade with your spouse, your friend, your wife, your kids, your parents, your aunts, your uncles. It's really important to hold yourself accountable, right? You always want to be accountable. That's to the three people that mean the most to you, and those are not just me, myself, and I, okay? You need to keep yourself accountable. I text Tyler and Maria every single day exactly how I've done on the SPX 0dte's, because they don't believe in the math like I do, okay? Although they do now, but they didn't back then. So even I've been doing this for years. Even I fall prey to the three worst people, okay, is woulda, coulda, and shoulda. They sit on your shoulder and they bark at you all day long. Oh, you shouldn't have gone in on Tuesday. You lost 65,000. It's totally your fault, blah, 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 blah. And first of all, Maria, Tyler, and I have a rule. We all trade our own accounts, okay? We make the final decisions. It's more than acceptable to make recommendations, comments, to call people names. That's fine. That's part of the game. But the final decision is always that person, whatever the name is on that account, that's the person that trades it. So I'm a big boy. I traded my own account. I traded on Tuesday, got the double whammy. It happens. I get it. It happens. We just call that trust the back test. You stay in. What I did is I panicked, and on Wednesday, I got out. On Thursday, I got out. Maria said, you better run a back test and see what you would have done. So I ran, and I said, well, look, it was up and down, up and down. I'm going to run a back test. What do you know? I would have won $61,642. So let's just review. Worst day was 65. If I'd done those 2 days, I would have made back 61,000. Are you kidding me? I mean, that's just nuts. So moral of the story, don't do what I do. Trust the back test. Trust the math. It really does work. Don't follow me. Now you know another reason not to follow me. But I would take a hard look at the math because it does work. In our small account, $30,000 account, we're up 14 grand. It's almost 50% in 5.5 months. That's pretty sweet. Okay. So we do credit spreads. We've done 8,089 credit spreads on 105 trading days, 165 calendar days. The average per day is 77 credit spreads. I want you to look at that. Think about that. That's a lot of trades, right? A lot of trades. When people tell you, oh, I've got a great trade for you. It's the box trade or the momentum trade or the 112 trade or whatever. Ask anybody, anytime someone tells you a trade, you're sitting at Thanksgiving, your aunt or uncle say, I got a great trade for you. It's the 112. I say, okay, great. How many times you did? Oh, I've done it a lot. I've done it every single day for a year. I say, well, every single day for a year, that's 250 trading days, right? 250 trading days. That's awesome. And how's it worked out for? Oh, it's worked out great. 250 trading days. That's great. That's great. Tell you what, I test 7 million trades every single weekend. And that's the data I use. I'm not saying that makes me smarter. It certainly doesn't make me smarter. I went to a public school. I'm not smart at all. But it does make me more informed, okay? It does give me more information with which to make my decisions. And that's what makes us humans superior to robots, is that we can use thinking, right? We can infer, we can make inferences that machines are not quite as good at doing. I'm not saying they're not good at it. I'm just saying they're not quite as good. So the inference I can make from 7 million trades is probably superior to somebody who's used 250 trades. In fact, I had one of the founders of Tasty Trade. If I said their name, you know who they are. And they came to me and said, you know what's funny, Rob, is you backtest more trades in one weekend than I made in my entire career. So even if I remembered every single trade, which I don't, you have more information with which to make trades every single week than I do from a lifetime of trading. Think about that, a lifetime. We're talking some of the big name people, you know who they are at Tasty Trade. We have access to more information. It's not just me, it's anybody who uses Options Omega tools. Okay, and there's other backtesters out there. It's just, this is the one I like the best. All right, so total credit spread is 8,089. Of those, just so you know, interesting, we've won 4,800. We lost on 3,200s. Our win rate's about 60%. The average profit per spread was about $74. Okay, the average winning spread was $629. The average losing spread was $762. So we lost a little bit more on the losers than we did on the winners, but we're still quite a bit ahead. Okay, this is I found fascinating today. This is all information I looked up an hour ago. The put credit spreads, we've done 4,089 of those. They had a problem. I would have guessed put credit spreads are way more profitable. That's just not true. A lot, by the way, of what people tell you on the internet about trades is simply false. People tell you, well, you can't trade in the last hour and make money. Totally false. What's the worst day to trade? Thursday. Absolutely untrue. The #1 day for trading 0dte SPX is, ba-boom, boom, you guessed it, Thursday. That's right. How do I know? Because I put on a bunch of trades. That's how I know. I put on 8,000, blah, 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 whatever the number is, bunch of trades in actual real life. And that's what happens. Thursday's the best. Is it going to continue? And people, well, Rob, it's not a sample size, blah, 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 blah. Whatever. All I'm telling you, in my experience, you can't argue with my experience because that's my experience. Thursday, numero uno. All right. So PCS, credit spreads, look at that. 4,000 of them made twice as much money on credit spreads. Never would have guessed that. Never. All right. So we made 510,000 if you didn't, if we just followed the math, right? So our average is about $4,800 a day, $4,900 a day. That's what we're making on $1 million. Not too shabby. So the real edge, though, think about it. There's 3 takeaways I've got here for you. This is number 1. You can tell because it's got a blue number 1 there. The real edge, the small average gain times the massive sample size. If you take the average profit per spread of $74 and we're doing lots and lots of credit spreads, you can see that's our edge. It is a consistent small edge, right? The herd's over here selling for 2. We're over here selling for 4. And that's what gives us the edge. This is simple stuff. It's like chess. I can teach you how to play chess in half an hour. I can teach you how to master chess. Never, because it's impossible to master. Likewise with trading. But here it is. This is how you make money, how I make money, at least, trading SPX 0DTs. Number 2, the system's production rate, 105 trading days. We're doing 77 trades per day. Lots and lots and lots of trades. So we're not hoping for one big trade, and we're not going to get hosed by some tweet, some tweet or Tweedledee and Tweedledum in a double tweet day. It still didn't kill us, right? It still didn't. We're doing great, even on a double tweet day. All right. Now, the daily production of the $1 million account, if on that profit, if you think about it, over 105 days, 4860. That's a great takeaway. The peak equity in that account was $1,480,000. I think right now it's at $1,420,000 or something. Our max drawdown was $78,000. Max drawdown 5%. Max drawdown means wherever you are in the curve, the worst you're going to do in any consecutive before it starts coming back and gets back up to where it was is that max drawdown rate. Most hedge funds are in the 10 to 20% rate. A lot of hedge funds, when there was a huge down market, they got totally wiped out, 0DTE hedge funds. Right now, if you talk to hedge funds, they will pretty much typically tell you 10% is where they are. We're nowhere near that, right? Nowhere near that, because we're doing lots and lots and lots of little trades. We're doing back testing. They're over here. We're over here. They're selling over here for 2. We're selling over here for 4. 7 million. The big funds don't do that. They're lazy. I don't know what that is. They don't follow the math. I can't explain it. Or they're greedy. Whatever. Their max drawdown is 10. Ours is 5. Okay. Next, look at our daily return characteristics, right? Our average daily return is about 0.34%, and that's really consistent. Our daily volatility is only 1.48%. So we're making small positive daily returns with very small variability, right? It's more like this. It's not like this, right? It's not like this, like some of these funds. And hedge funds are the arch enemy, by the way. It's not retail traders. There's always somebody on the other side. You got to think about what that person's thinking on the other side, and we're trading against them. But just keep thinking, they're over here and we're over here. If you understand that, you get it. All right, the Sharpe ratio. Everybody wants to talk about the Sharpe ratio. All the mathematicians talk about the Sharpe ratio. It's just a way of measuring your risk in a down market or when you're in a down move. Think of it that way. What is my true risk? All right, well, 3.69. What's that mean? Good question. What does that mean? Let's look. If you are a retail trading system, typically they're going to have a Sharpe ratio of 0.5 to 1.5. A professional hedge fund will have a Sharpe from 1 to 2. The absolute best hedge funds will have a Sharpe from 2 to 3. The elite quant funds are over 3. We're at 3.7. So look at that again, right? Look at that again. These funds are right here at 3, and we're at 3.7. Okay, this is probably the number I'm most proud of. All right, 6 key takeaways. Profit loss Friday was 400. Oh, I'm gonna get to the chat room in a second. Just give me a second. I'll get through these trades and we'll get to the chat room. All right, so here's the key takeaway. I've talked about all these things. System performance. Let me look at the chat room here. So, in case you have to call, blah blah blah. Thumbs up if you like and find this channel helpful. Thank you very much. Hey, by the way, Maria and I are trading addicts. We love to trade. We trade 24 hours a day. We talk about 23 hours a day for sure, 5 days a week. We love to talk about trading. We think about trading. We're laying in bed. We're talking about trading. We're looking on our phones, talking about trading. If you are a trading addict like us, put addict in the comments below. And remember, we never ask for anything. The only payment I ask is if you could recommend us to somebody. Great, subscribe and like. My grandkids tell me that's important. But believe it or not, the best thing you can do is go into any of our videos and comment, even if you just say, I'm an addict, or tell me more about AI, or let me hear about Tyler scalping. Just put addict, anything in there. I respond to every single one. We have a Discord, but YouTube doesn't care about that. I'm not trying to make money off of YouTube. I just want to reach out to more people. And the way you do that is get YouTube to recognize what you're doing. Okay, so let's go back to this, and let's try and get to these trades. So here we are. You can see these are all the things I'm very proud of. And here's some more system performance metrics. And it's really important that you take a hard look at this. I just want you to see that this system does work, if nothing else. And then this is my most fun one, is people ask me, well, what's the percentage profit? There's a million ways you can measure percentage profit. The compound annual growth rate is probably the best way. And people say, well, how do you figure it out? I figured it this way and that way, whatever. Okay, I get it. There's lots of ways to figure this out. It turns out if you Google it, you can find 7 different ways to calculate it. This is how we calculate it. So I'm showing you the exact calculation. So the idea is if you started with $1 million and you just left it all in there and it kept growing and growing and growing and growing, that you'd be at whatever. You'd have your $1 million plus another $1,480,000 at the end of the year. That's what it means. Okay. So let's take a look-see. All right. So here is the actual trades. You notice it said 510. Remember, I didn't trade on 2 days. It would have made an extra 61 grand. So we're up 440 grand and we've done the 16,113 trades. We capture about 10% of our premium, and we've sold about $4.8 million worth of premium since October 1st. In the $30,000 account, as I told you, we're up about $14,000. And most importantly, look at these charts. I mean, they're pretty similar, right? Here's that gigantic down day when everyone was in a panic, the double tweet, we lost 65,000. No, nobody's going to remember. Do you remember this down day? I don't. Do you remember this one? No. How about this one? No. Do you remember this down day? No. You remember this down day? That's 3 in a row. Do you remember that? No. Remember this one? No. And are you going to remember that one 6 months from now? No, you're not. I probably will because I internalize my down days quite a bit, but that's where we are. Okay. So now the trades are next. My lawyers make me say it again. Do not follow us. Do not copy these. These are for entertainment only. This is for education purposes only. This is not financial advice. So here we go. For the 6 trades a day, these are the trades that we're going to actually be putting on. That the P means that's the premium amount, and this is by time, right? So we're going to search for a $3 premium for the short leg on the put credit spread and on the short leg for the call credit spread. If you don't know what that means, watch our YouTube channel. We got lots of videos on exactly what that means. Watch that 5-part series I told you about. So we're going to put on a put credit spread and a call credit spread. This is a short leg and a long leg. This is a short leg. This is a short leg and a long leg over here, right? So the idea is that you're going to be putting on a put credit spread separate from a call credit spread. You're not going to put on an iron condor all at the same time. When you put it on, the target, the $3 is on the short leg only. So it's not the short minus the long. It's just the short leg only. Okay. Next is the M. The M in here. What's the M stand for? Multiple entry iron condor or exponential moving averages. To make it easy on the $30,000 account, they're all multiple entry iron condors. Stop loss, 95%. Again, that is on the short leg only. It's not on the put credit spread. It's not on the whole multiple entry iron condor. It's just on the short leg. So on the short put and the short call, it's 95%. Okay, one moment, please. Quick commercial break. I'm no longer allowed to say the name of the iced tea, but it's sugar-free with lemon, and I put apple cider vinegar in every day, and I do love it. Okay, back. That's the end of our commercial. So here we are. Our width on the $30,000 account is always going to be 50. I don't know why my little mouse is not showing up there. It's always 50. Here's the time of day. This is East Coast time. Somebody asked me. And so 11:53, you can see we're putting on 2 of them at 12 o'clock, one at 12:07, one at 2:34, and 2 of them at 15:23. People that tell you that you cannot trade after 2 or 3 o'clock in multiple entry iron condors, ask them how many times this weekend they back tested 7 million tests, because we have, and these are the best trades. Okay. In our opinion, these are the ones we're actually going to be trading. When I say a $30,000 account, that's $30,000 in buying power. It's up, what did we say? 13,000, 14,000, whatever it is. So it's got 44,000. I'll probably actually put on a few more trades, a little that I don't have up here, because this is about $27,000 worth of buying power, I'm guessing, based on just doing it in my head. And so I like to use 100% of the buying power that we're talking about every single day. That doesn't mean you don't ever use 100% of buying power in your account. You know, I have 30% I use for the crazy Ivans. I hold back 5 as protection, and then I use 65% for the SPX. Okay, now we're going to do it by P&L. So the most profitable trades are the top ones, right? That's the idea. So it's a $2.25, which is $225 target for the short leg, then a multiple entry iron condor, stop loss 95, wing width 50, and then the noon one. And so I understand I'm going kind of quick. I talk fast. The great thing about YouTube, you can stop it, you can rewind it, you can watch it again. These are the trades I'm putting on every single day this week, unless something crazy happens. This is what I'm doing. Do not copy me, but at least you have a guide and you can follow along and say, oh, you know, when I tell you on Tuesday night we lost $14,000, you can say why, and you can look at these trades and say, oh, I see exactly why. Okay. So now in the $1 million account, which is now $1.4 million, so I'll be trading with about $1.4 million worth of, actually I'll be probably putting on $1.6 million worth of premium. And why is that? Because I know when I get stopped out, I can reuse the buying power during the day. So I've been reusing buying power, which gives me a little more leverage, which is great. The more instances you have, right? If you have a positive expected value, the more times we can trade, the better. That's just, it's just absolutely a math game. Okay. So on this one, for example, the premium is $1.45, multiple entry iron condor, stop loss 95, wing width 150, going at 947. Notice this is 225. This is exponential moving average, okay? E, red alert, exponential moving average. You're going to compare the 20 versus the 40 minute. You're going to take whichever direction it's going. You're going to go the opposite direction, and you're going to do just one credit spread, either a put or a call. So if the market is going up, you're going to put on a put credit spread. If the market's going down, you're going to put in a call credit spread. Okay, very good. Okay, so look at somebody in the chat room said as sharp as 3.49. Cool. That's right, Trading One Nomad. Most hedge funds will, if they tell you, if they know they're sharp, they're going to tell you it's 2 or 2.1, something like that. We're at 3.7. Nobody does that. Nobody. Okay. All right, fine. Don't get your things in a bunch. Few. Okay, few. Let's leave it with that. I don't want to have this fight. So, okay, buy time. Here's where we are, right? It's a lot of fun. You can see some of them got a stop loss of 225. So, you got to read this chart pretty carefully. Profit target 0. Our CPA, when he started seeing our numbers, he couldn't believe it. I think he's putting $1 million so far into his account and keeps adding more. A lot of his customers are adding more, and they keep wanting us to trade for them, which I don't do. But he said, let's do a profit target 95%, 90%. We back tested all that, which we did that one week when we ended up doing like 20 million trades that week. We back tested, and that does not pay off, right? It's always better to trust the back test. Do not be like me and stop doing them on Wednesday and Thursday. What a dummy I am. I could have made $61,000. Okay, so here they are by profit and loss. And you can see we're going to be doing about 150. So I'm only showing you the top 15 or 20. I got to save something for myself. Am I right? So here they are. Still, these are pretty good. And, I really don't like the idea of giving you these trades. I would much prefer that you learn how to do it yourself. A pretty smart fella said, give a guy a fish and you can feed him for a day, teach him to fish, and you can feed him for a lifetime. So I'd much rather teach you how to fish. All right. So there they are. This is, of course, the subscribe and like. Don't forget, 325 every single day. Maria are on there. I'm trading full-time, doing the Crazy Ivans. We're down 59, so I can't really do a Crazy Ivan tonight. But what I will be doing is I'll let you be trading my trading daddy's money. Let's take a look at the chat room. So are you the only one who wears a suit? Yeah, I moved to Florida to chase Maria. I thought I'm going to wear a suit every day, but I was thinking it'd be a swimsuit. I didn't think it'd be a suit. I like wearing a suit. I do. Call me crazy. First of all, I think it's nice to dress up. Maria and I used to live in New York half-time, 3 weeks in New York and 3 weeks in Daytona. And I really miss New York a lot. You can dress up for dinner there. She wears really nice clothes. She's real pretty. And so it's a lot of fun to get dressed up and go out. And I do miss it. The food is spectacular. And the people are great. Say what you will about New York. Maria's born and raised in New York, in Brooklyn. So they're just wonderful people. And it's a really small town when you get to know it. With my personality, I meet a lot of chefs and the maitre d's and the waiters and all that. And so we got into tables. It's never hard to get in once you know the people. If you're a tourist, it's hard. But once you get in and you get on the inside track, it's really great. I mean, it's as good as it gets. Great plays, great theater, great museums. Central Park is unbelievable. I mean, it's one of the most relaxing places in the world. We used to live right on Central Park, and it was spectacular. So enough. All right. So what was the question? I forget what we were talking about. So, okay. So how are you selling for 4 if they are selling for 2? Oh, well, that's because we're not selling where they are. They're selling a different premium. They're selling a different time. They're selling a different stop loss. They are not selling it. When you have millions of people that are all selling, they say, 1207 is the time to sell. They're all selling at 1207. Well, we run a back test. 1207 tests terribly. Why? Because all these people are selling at 1207 and there's nobody selling at 1551. So they're selling and they drove the price down to 2. And at 1551, I'm the only guy out there. I can sell it for 4. Have you ever watched that movie Trading Places? And they go, wait for it. Now, and they go, I'm selling orange juice. And wow, the place goes crazy because all the buyers are there. That's what we do every single day. Every single day. The herd is over here selling for 2. We're going to say orange juice over here for 2. And here they come. And wow, and that's up there. That's the video I was talking about, the training video. Okay, how much do I need to follow your trades? A lot of people ask that. It's a great question. Who asked me that? Jack Hudkins. Jack, I never seen you in here. Good to see you. I see Cars and Hedges, Trading Nomad, Jad Hudkins. I see a lot of new people in here, and that's great. So I like to see, first of all, there's crazy, don't get me started, but the trading network is set up wholly against the small trader. The big traders have all the advantages, right? And the small traders, they even have crazy rules. If you have less than 25,000, we stop you. This is what I heard. This is what I looked like when I heard this rule. They stop you from trading more than 3 trades a day. That's insane. Why would you handicap somebody who doesn't have much money? I mean, that's nuts. So I like to think you should have 30 grand. If you really want the math to play out for you, 100 grand of buying power, okay? So that's not just money, but that's buying power. But having said that, let's take a quick look-see at, where is it? Where is the chart I want? Right here. Okay. Let's look at, I don't know what I did. I want to look at the chart. Okay, this chart. Look, this is an account that started on October 1st with 30 grand of buying power. And it's made $14,000 in 5.5 months. Yeah, it's up and down, up and down. But you know what? It's made 14 grand. So it's made 50% compound annual growth rate, probably over 100%. I think you'd be hard pressed to find a trading strategy that would produce these results. Here's the downside. It takes 2,900 trades. And by the way, I haven't mentioned this. How many trades do I personally do a day? 0. I don't do any. My robots do it all. My robots do everything for me. I don't really like to call them bots. I don't make any trades. Option Omega, you can take your back tests and you can real easily turn them. It's not an ad for Option Omega. I'm just saying this is a product I use. I like it. And there's one of the reasons why. I can take my best back test and turn it into a bot, right? And the bot fires off by itself. If you come and trade with us at 3:30 Monday through Friday, you're going to hear brr, brr, brr in the background. And that's those bots trading on nonstop all day long, right? That's exactly what they do. Let's see what else we got here in the chat room. Front running your orders. No, I'm not front running my orders. You can front run my orders if you want. I gave you all mine. I don't care. I don't care, because if every single person in this channel all traded every single trade at the same time, we're still not big enough to move the market. We're talking about millions and millions of contracts are trading every single day. There's 10,000 milliseconds in every single second of 390 trading minutes. There's no way that we can influence the market. It's just not possible, right? It's just not possible. So people say, oh, you're giving away your trades, Rob. You're going to ruin this for everybody. Really? I'm going to ruin it for everybody. Well, I got news for you. What's this say? I've been giving out the trades since October 1st, every single day. If you wanted to, you could front run all of my trades, right? You could get out in front of me. Every single person in here could. We're still making money. So I don't buy it. I don't buy the front running thing. Okay. So let's see. VWAP, would love to see you slowly scroll one of your 0 back tests top to bottom for reference. My back tests are, okay, you know what? I do that every single day at 3:25. I scroll down every single trade. And not only that, I post almost all my trades in the $30,000. I trade all my trades in the $30,000 account in the Discord. And I post most of my trades in the $1 million account on there. Nobody else does that. Nobody on the internet posts. I find somebody else on the internet that posts 8,000 trades or 16,000 trades in 5 months. Nobody. I don't have anything to hide. What do you think? I'm trying to trick you? What's in it for me? Yeah, I don't get it. People are like, oh, it can't be true. It can't be true because it's so. I don't know what to tell you. Those are the numbers. It does work. It's just math. It's not magic. And every day, if you go on our Discord, you see other people, winner, winner, winner. I lose, they're loser, loser, loser. It is what it is. You know, VWAP 2 standard deviation on S&P with short gold position will come out on top this week. I hope so, Digi Consulting. I love it. Nice. It says full of it. 14% go invest in a BDC. I don't know what that means in a BDC. But what broker is best for that much in commissions? Okay, so there's a lot of brokers out there, and everybody asks about commissions and fees, and there's 3 things you need to worry about: commissions, fees, and slippage. Commissions and fees are pennies, slippage are dollars. Let me explain. A commission you're going to pay on a trade, say 40 cents, 50 cents, 60 cents, maybe $1 if you're really getting hosed. But once you get up into volume, you're probably going to get them down to 50, 40 cents. And then the fees are going to be somewhere in the 60 cents range. So it's going to be $1 for every trade. So if you're selling a put credit spread for $250, that's $250, it's going to cost you $1 in commission and fees. However, When you buy or sell, there is something called slippage. So you put in an offer, you want to sell it for $2, but when you put in the bid for $2, it fills at $1.95. So that's 5 cents in slippage. People say, oh, it's only 5 cents. No, because there's 100 shares, it's actually $5. So the commission fees is $1. Maybe you can, maybe it's $1.50. You get them down to $1, you save 50 cents. But if you find a broker where the slippage, instead of being 10 cents, is only 5 cents, that's $5 you save on every single trade. How many trades did we make this year so far? I forget what it was at 16,000, right? So you take 16, somebody that went to public school, private school, do 16,000 times $5, and you're going in and out. I mean, it's all kinds of trades. It's a lot of freaking money is what it is. So we use Tasty Trade, a couple reasons. Tasty Trade is smaller. I love their interface, right? It's real easy to do. There's nothing to it. I like to see the positions. It's pretty straightforward. We're down 725, so not down enough to do anything. So I like it a lot. They have great fees. Most importantly, though, what I really, really, really like about Tasty Trade is tech support. So when you call them, if you find a tech support guy or gal that you like, you let them know, and that will be your tech support person. So anytime they're working, typically most of them work every single day or 5 days a week. When you call, their phone system automatically routes it to their headset. So if you want to talk to them, and if they're not busy, they'll take the call. If they are busy, you'll be a voicemail, and they'll take you in the next call, right? Rather than just taking one out of the rotation. So they get to know your trades personally. And ours are Marty and Quentin. Those are the two guys that we use. Love them. Maria and I have spent a lot of time at Tasty Trade headquarters. We've been in their studio. If you've looked at our website, you see us with Tom and Tony. And so when we went there, we spent a lot of time with Marty and Quentin. Great. Met Quentin's dad, and Marty's he's been a trader for 40 years, and he's been working on the tech support desk for 10 years after he retired. Great. He can tell, and then do more than just tech support. They can't give you financial advice, but they can tell you all about different types of experiences they've had trading and ways that you can use to get out of a problem and things you might want to think about. And they can look at your account and say, wow, you might want to think about this, that, or the other thing, which is a lot what Maria does with Vera. Maria takes a screenshot, puts it in Vera, and then she all day long talks to Vera about her positions using AI to trade. And that's why Maria makes so much money. The other thing I like is Schwab. Schwab, same thing. Their tech support is not as personal, but the great commissions. But again, slippage, super low. Slippage in all our experience, everybody else is 10 cents in slippage. Schwab and Tasty are 5 cents. That could change. I could be wrong. Others are coming along. There are more and more people catering to us types of 0DT traders, but that's been our experience. So those are the two that I recommend. I love you, Rob. I mean, show me more of the backtest parameters, more detail than the 5-part series. Okay, Dave, man, I can do that. If you ask me on I don't have it set up right now, otherwise I would. But if you have it, if you reach out to me on the chat on Monday, I will have that set up so that I can show you very simply how I do trade. There's no secrets. And by the way, if you are a member of, if you pay for Options Omega, they have a Discord. You can go to something called test-strats, and there you just type in the word share, and there are thousands and thousands and thousands of backtests, including all of mine. So 90% of the trades I put on are in there, right? They don't allow you to backtest the Qs, so those aren't in there. But all the multiple entry iron condors, all the exponential moving averages, every single one is in there. You can go to those backtests. You can run them. You can see what my trades are for the week. You can go through and verify that I'm not lying about my trades. I mean, first of all, why would I? But okay, fine. So go ahead and take a look at them, and you'll see I'm not lying and that all of it's there. Don't copy me, but at least you can verify, oh, I see what he's doing. Now, maybe I want to do it a little differently. My situation is different. I want to do less stop loss. I'm willing, I want lower wing width, which is going to keep your victories lower, but your losses lower too. So you want to stay in a tighter range. You don't, a lot of people don't want to lose 30% or 10% or 5%. They want, 1% movement. Okay, fine. No problem. It's risk versus reward. Is all it is. Risk versus reward. So, okay. The more you share, some hedge fund will start outrunning you, and soon enough, edge is gone. That's my worry, but I got your answer. Yeah, I've met these people, okay? And they're lovely people. running these hedge funds. They're great people. I'm not convinced that they are trying to make the most amount of money for their customers. I could be wrong. I think they're trying to make a good amount of money for their customers, but they're also paid to manage risk. That's really what they're doing. And so when you're managing risk, you are not looking to have the biggest profit or loss. I mean, think about it. If you have $1 billion fund, do you want to risk losing $10 million in a day? Probably not. You can make 20% on the money pretty easily. They get paid 2% as a management fee, and they get 2 and 20. They get 20% of the profits. So if they got $1 billion fund and they make 20% of the profits, that's $200 million in profits, and they're going to get 20% of that. That's $40 million bucks. Plus, they're going to get another $20 million on the on the 2% fee. That's $60 million bucks on $1 billion fund. And they got maybe 25 people running it and maybe 50 people on the marketing side. It's all gravy. I mean, that's why they can afford the $250 million condos in New York. So I'm not so sure that that's really true. I'm not confident that it is. Maybe it is, but they've had every opportunity and it hasn't happened so far. I have been contacted by a few hedge funds, but I'm not interested in doing that. It sounds a lot like a job. First time here, so you enter around 3:30 Eastern time and get out by 4 Eastern time, 0dte on NQ. No, I do not. And you missed the crazy Ivan. I go in anytime that the market's down 200-300 points. Maria's a little bit different. She wants it to be down a little bit more, but the Qs are down 200 or 300. Then I'll go ahead and I'll sell one at 45 to 60 days DTE at 12 delta. And I'll sell, if they're asking 200, I'll offer it for 210, 220, 230, 240, 250, 260, and maybe 300. Those are because it's crazy. I want a crazy price. And they'll get fills. And then what I'll do is I'll sell them at 25%. And that usually is going to take on average 14 days. Normally I sell them for $4,000 using about $14,000, $15,000 in buying power. And so if I win 26 times during the year, that's 26 grand on $14,000 in buying power. Let's say that I lose 2 or 3. Last year I lost 3 days of losers. It cost me 4 days to win them back. So 4 days was my cost to win them back. So my cost was 12. And so, I was winning 26. It's 12 on 3. So I was winning 26, but my cost was 12. So I ended up being 14 ahead. So 14,000 on 14 buying power. I made 100%. I made 102% the year before that. The year before that, I made 52%. So, it's great. It's my favorite, gun to my head. It's my favorite trade. It started because I used to talk on Tasty Trade all the time about gambling. And I would say to those guys, gun to your head, what is the number one? You only could do one trade in your life. What would it be? It would be naked puts on ES. They said 45 to 60 days out, 12 delta. Maria, as before backtesting, she ran a whole bunch of things on it and did a whole bunch of spreadsheets. And she said, Rob, we would be way better off to do the Qs, look at the numbers. Of course, I didn't need to look at the numbers. I just looked at her. I know she's smart. I mean, look at her. She's a brain trust. So that's what I did. And I've never looked back and never regretted it. It's real simple. It pays like gravy. All right. I love your work. Thank you very much. Thanks concerning Tasty Trades. Yep. Jack Hudkin. I wonder if he works for Tasty Trade. So I know you, okay, are telling the truth because I have copied your trade and done well. Dave, you're not supposed to copy my trades. But good. I'm glad you've done well. And, what we ought to do is start a Discord channel that says post a W for every day that you win and an L for every day that you lose. I'm very fearful to see what people might say. O equals options omega. Yes. Why do we start we start the show at 3:30. It's just a show we do live on YouTube. And the reason I do it at 3:30 is because I'm bored. I'm bored to death. Before I did this YouTube channel, I would just go swimming we live on the beach. I would just go swimming and surfing every single day. And Maria would be so pissed because, my thing's going ding, 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 ding all day long. The bots are trading, bum, bum, bum. And she's in front of the computer. You with Vera. Before that, she was in front of the computer with her spreadsheets, working so hard. And she and Tyler are on the phone. What do you think about this trade or that trade and the charts and their earnings and blah, 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 blah. And so she's like, you're not even working hard. So, well, I spent 22 hours on the weekend doing back testing and then getting the robot set up. But yeah, I don't do anything during the day. It's all up to the bot. She goes, what if, I say, I trust a back test, which if I would have done on Wednesday and Thursday of this week, I would have won another $61,000. Stupid. But what are you going to do? So, okay, any more questions? We probably are dragging this on too long. I have learned a lot from you already. Oh, great. I think I will come back here soon, and thank you for changing my life. Well, I don't know about that, but I'm glad you are having fun. I will do more videos. Maria did an 8 or 10 minute video yesterday that I still got to do some editing on, and that will come out tomorrow, which details a lot of how she trades. I really never planned on doing a how-to. Options Omega has a whole bunch of videos. They have an academy, actually. And in that academy, it has detail by detail how to set up their back tests and how to set up their trades. And then, like I said, go to their Discord. Just search for Rob and Maria. You'll find, and Rob and Maria /share or something like that. Ask anyone in the Discord how to look at it. Say, and that's what you'll look like when you find, you'll be like, oh my God, look at all those trades that Rob's posted. And you'll see almost every single trade that I put on is in there. If you ask me tomorrow, I'm happy to show you. I just am not set up how to do it. I'm not that good with the internet. So, but I add a debit spread, so mostly a 111. Yeah, be careful with the 111. With the 111, I used to trade the 120, 120, the 122, the 112, and the 111. I used to trade a 114, a 124. And what happens is they are really heavy to the put side. And if you're not watching your buying power, you can really get the old squadoosh. And so I like to just do them naked. It's really easy. And you know exactly where you stand. I mean, look, I can go over here. Look, I can go to Tasty. I can see right where I stand. Man, it's a trading show. We're almost up. What are we up? We're up 65 points. So if this thing goes up to 20, I'm greedy. But tomorrow, if this thing goes over 25, I promise you I'll close it. I'll close it at the 3:30 show, if nothing else, because I want to do some trading. But we will definitely trade at 1351 tomorrow, and you will decide exactly which trades I do. It's a lot of fun. I'm a trading addict. I love to trade. If someone could convince me to trade every minute of every day, I would do it. So it's just, it's in my blood. My grandparents were all mathematicians. They gave me a abacus when I was 10, a slide rule when I was 12, and a book of random numbers when I was 14. My grandpa, who was a mathematician, professor, and nuclear physicist instructor, and my grandma, who was a mathematician and German instructor, and both of them were at Princeton with Einstein in the German mafia because they're all German. And I said to my grandpa, you gave me a slide rule when I was 12, an abacus when I was 10, a book of random numbers when I was 14. Why is it you only do it when I was turned 10, 12, and 14? No birthday presents any other time. He looked me dead in the eye and he said, Rob, if I did that, that would be odd. He waited 5 years to land this stupid joke, okay? And that's what my face looked like when he told me that. That's the kind of family I grew up in. They taught me how to play blackjack when I was 10 and how to deal cards when I was 12 and how to count when I was 16. I quickly got kicked out of all the casinos before I turned 21. So gambling is just math. Now they don't call it math. This is another thing I learned as I got older. They say, Grandpa, we don't call it gambling anymore. It's called predictive markets. Predictive markets. By the way, Robinhood is if you want me, gun to my head, what's my stock pick for the year? Hood. Absolutely Robinhood. Love this kid who's running it. Great idea. And he's figured out how to get around all these gambling laws. It was illegal, and then it's all regulated, and you can only do blah, 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 blah. And he said, no, we don't do gambling. We do predictive markets where you predict outcomes. It's just like stocks. You predict the outcome of the price of Microsoft or Google or whatever. Oh, okay, give me an example. Well, let's say on the Super Bowl that you want to predict that the Chiefs would win. That's not gambling. See, that's not gambling. That's predicting. Oh, that's predicting. So that's not gambling. Now, if I go to a bookie in Brooklyn, like Maria, her people, what do you mean you people, right? There are people that take bets in Brooklyn, and you can bet or gamble on the Chiefs winning the Super Bowl. People say, oh, that's betting. That's bad. Oh, I'm in predictive markets. It's on Robinhood. It's something that we do on Wall Street. It's predictive markets. Oh, that's fine. That's not gambling. Okay. Fine. Potato, potato. But it is funny how the rules have changed, right? I would have kept gambling. I love gambling. I'm a gambling addict, right? The thing is that it's very difficult to get an positive expected value in gambling. It's quite easy, not easy. It's possible in options trading. And if you go to a casino, you got to get you got to bet a lot. You get to get them to change the rules to be slightly in your favor, and they're typically not going to do it anyway. And in the sports book, you can't get enough. There's not enough action, right? There's not enough bets. Even in the Super Bowl, it's maybe 500 possible outcomes during that you can bet on the Super Bowl. But in options, there's millions every day. Millions. I mean, millions and millions. I backtest 7 million of them every weekend. There's 97 million I could without even falling out of bed. So that's why I love options. I just love them. I've been doing them since I turned 42, which was 20 some years ago. And Maria and I have been doing it for, I don't know, thousands of days in a row. We never missed a day. We just love it. We're trading addicts. If you're an addict, put addict in the thing below. Check out our Discord. See you at 3:25 Monday through Friday. Any other questions? Do you ever have problems with Tasty Trade not executing trades with options Omega? Schwab has problems at times. Okay. One quick thing about once you understand they're over here and we're over here. Yeah, you get it, right? You understand the math. You know how to back test. You know how to do the trades. Okay. Now you've negotiated your commissions. You've picked out who's got the best slippage. Now there's some rules about execution. All of our 0DTEs are handled by the Chicago Board of Exchange. They only handle one trade at a time. There's only two things you can do on the Chicago Board of Trade: buy or sell. That's it. One, either buy one or sell one. And then you can do different lot size, but it's buy one, sell one. Nothing else. There's no put credit spread. There's no Iron Condor. There's no Crazy Ivans. There's no Jade Lizards, no Strangles or Straddles, none of that. It's one trade at a time. People say, well, Rob, how do we do all these trades? Your broker's doing it. Okay, so if you say, I want to do a straddle or a put credit spread, that's a put and a long put and a short put, right? That's held at the broker. So the brokers, and you say, if he said, I want $2 for that, then what the broker does is they hold on to it, and they're looking at both the long and the short. And when they're watching the trades and the prices, both of them are moving, and then they get it within $2, boom, they execute the trade. That's what they do. And they send it to the CBOE, and then the CBO execute it. So if there's a break between Tasty Trade and CBOE, there's no trade. That's fine. Going in doesn't matter. Coming out, it matters. So what we do coming out is we trade. If you have say, well, we went in as a put credit spread. How do we want to come out as a put credit spread? No, you don't. You want to come out as a short leg only. Now, why is that, Rob? Well, because if you go in a twosome going in, that's fine. But to come out, if you're going to come out as a twosome, that trade cannot be at CBOE. That trade has to be held at Tasty or at Schwab or Fidelity or IBKR or wherever. And so they're watching, blah, 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 and you've got, say, you win it in at $200, and you said, Josh, if it goes down to negative 400, so I would lose 200 because I got 200 when I went in. Now I'd pay 400 to get out, so I'd be net negative 200. I want to get out, right? Let's call it a stop loss. So if you've got, say, when the put credit spread together gets to that $2, I want out. Well, if you did that, the broker, IBKR, Tasty, Schwab, whoever, they can only put in one-legged trade at the CBOE. So they have to hold it, and they're watching. Oh, 200! Whoop! They send it over CBOE as fast as they can. CBOE will execute it because it's a market order. They'll execute it, whatever it is. So it was at 2 o'clock. It was at $2 at $4 at Tasty. By the time it gets there, it's $4.10, and the first trade is $4.20, and you just lost $20, right? And they say, $20 is not that much, Rob. Well, got news for you. We did 16,000 trades. It is a lot. Okay, $20 times $16,000. You do the math. It's a lot. It's a lot of money is what it is, okay? So no, but you put it in as a single-legged trade. So now, remember, I told you, you go in, there's a method to my madness. You put in a $2 when you go in on, I told you, just on the short leg. Now to get out, you put in the order $4 on the short leg only. Why is that? That rests at the CBOE. Now, this has happened to me, and it will happen to you. All these brokers, the question in the chat is, well, what about, I heard Tasty went down and Schwab went down, whatever. They all go down, okay? And it's not just them. Remember, you got Options Omega with the bot, then they're talking to the broker, then the broker is talking to Oprah, their clearinghouse, and they're talking to CBOE. And between each of them, there's electronics, right? So you got Options Omega, the electronics line, the broker, the electronics line, the clearinghouse, Oprah, whatever, communication line, and CBOE. So CBOE, the way it works is the first people line, us, as long as you're doing less than 390 trades per day, right? And that's a real important rule, on average over any 30-day period. That's great. That's fine. I'm about 200, so I'm still good. That's called a retail trader. Retail traders go first in time, first in right. So the institutions come out, hedge funds come after me. I'm first. Now, of the retail traders, first in time, first in right? So I want to be in early. So I put in a trade at 10:07, okay? And I say, I want to get $2 going in. So boom, I get filled at $2. So now what happens? I say, Tasty, send a stop loss market order on the short only to CBOE. They say, happy to do it because it's just one leg. They send that to, see, I got CBOE over here. So they send it over here to CBOE, okay? So now CBOE has got that trade. It's sitting on the books. It got in there at 10:07 a.m. First in time, first in right? So now somebody else who doesn't know what they're doing, right? It all comes down to execution. They put in a stop loss on the entire spread. Well, the broker says, I can't send that entire spread because it's a two-legged order. I can't send that to CBOE. So just sitting at the broker. The broker's watching it, boom, 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 whoop, and it hits $4. And look at that gal's face, because what you're going to have a face like that when I tell you what happens. That's when the broker sends it to the CBOE, and boom, I got filled because I was first in line. You get filled at 254. You're behind everybody else who came in between 10:07 and 254. You're behind all of them. In addition, it's milliseconds. I told you earlier, there's a method to my madness. Lots of trades are going on. So what happens? Your trade goes behind them. Look at her face. She can't believe this. So now you milliseconds, you're going in behind people that have just put on the trades even. And now, on occasion, the broker is down. On occasion, the communication line to the clearinghouse is down. On occasion, the clearinghouse is down. On occasion, the line between the clearinghouse and the CBOE is down. None of that matters to me, okay? None of that matters. They could lose all their electricity at Tasty. Doesn't bother me. The communication line, Tasty to Oprah, doesn't bother me. I'm already sitting over at CBOE at 10:07, remember? That's where I've been sitting since 10:07. I can sit back. People say, oh, Rob, oh my God, Tasty's down, Schwab's down, Oprah's down, the communication lines are down, Options Omega is down. So what are you going to do? So, well, I'm going to just keep surfing. That's what I'm going to do. I'm going to keep swimming. I don't care because my little bot, she's sitting over here at the CBOE. I don't even know where she is. She's over there. She's just chilling, just saying, just waiting for $4. Gets to 4, I'm going to execute. If not, Rob gets to keep $200. Just sweet as sugar candy. So now what happens to you? Now Schwab comes back, Tasty comes back, and that's what your face is going to be. Because now all of a sudden they say, holy moly, it went past 4 and it kept going down. It went down to 10. We got to close this at $1,000. What? I was supposed to get out of 400. Now I'm getting out at 1,000. Yeah. Instead of losing $200, you just lost 1,000 minus 2, $800. How's that taste? Okay. That doesn't taste so good. So there's a lot to this. There are 1,100 pages to the CBOE rules. I like to read them once a month. They help me go to sleep. But if you're going to be trading a lot of money, I would certainly know what the heck the rules are. You stick with me, I'll be happy to tell you what the rules are. You ask me, I'll tell you. If you don't know what the MOC is, that's market on close. I talk about it every single day because I know there's a bunch of people that follow the market on close when it comes out at 1550, right? 1550. Think about that. And what's one of my favorite trades? 1551. Why is that? Because turns out I got a little theory that when there's a great big herd and it all moves because of one statistic that comes out at 1550 and they go, whoop, over here, I'm going to sell over here. They're going to sell for 2 because there's so many of them. I'm going to sell for 4 or I'll just be farther out. And I'm going to win. And that gives me an advantage. There is a method. You think I'm crazy? Just because I talk a lot with my hands and yell and scream? No, I'm telling you, this stuff makes sense. And once you start to get it, right? Once you get it, then you say, I understand completely. Then next Thanksgiving dinner, someone's going to come to you and say, hey, Charlie, you heard about this trade? Blah, 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 blah. Say, yeah, how often you done it? 250 times. Great. Well, Rob and I back tested 7 million. And how you doing on your trade? We're up 17%. Great. We're up 134% compound annual growth rate. What's your Sharpe ratio? Don't know what a Sharpe ratio is. Well, I do. Rob told me all about it. Ours is 3.5. Well, my money's in a hedge fund. Yeah, which hedge fund? Let's look it up. Oh, it's 1.8. That's pretty good. Not nearly as good as ours. So there's a method to our madness, okay? All right, now I see the chat room going crazy. What do we got here? Cars and hedges don't use limit orders. Yeah. No. So I use market orders. Okay, here's what happens with the limit order. The market, even if you're at the CBOE, right? If it starts going down, if it's at the exchange and you got a limit order over there, you say, okay, well, if it goes to $4, fill it at 4. Okay, so there's people in front of you. You got in at 10:07. There's a bunch of people that got in before you. And so it goes to $4 and they fill it. And now the only order that's available is $4.10. You don't get filled. You don't get filled because you said the limit I'm willing to pay is $4. No way, Jose. And I've seen this happen. Someone puts in a limit order for $4, right? It goes, people in front of them, they're getting out at $3.90, at $3.80, $4 is triggered, 1,000, net 1,200, $1,500 by the time it gets down to you, right? You don't get filled. So now you're sitting there and you're outside swimming or surfing or whatever, and you never got filled and the market's way down below you. It happens every FMOC. By the way, Wednesday's FMOC day. Watch my video. I got one of my most popular ones is how to trade FOMC days for fun and profit. But you want to be very, very careful. A limit order can really, really hurt you. And I've got a special video on that. Just search limit orders. Let me just put it this way. I never do limit orders on good now. It's very, very risky in my opinion. All right. What else? I am just moving to Hood and haven't placed trades yet. 3% match is exciting. Yeah, Tyler likes Hood. He just got his gold card after 2 years of waiting, which is kind of a good deal. They don't do futures, I don't think. Or maybe they do. I'm not sure exactly. Yeah, you're not crazy. You're passionate. That's true. I was wondering 3% will be wash with slippage and bad fills. Yeah, short stop loss is on early. What about the long? Oh, on the long, I use OTOs, which is one triggers the other, so that when you short gets punched out, then Tasty gets a note from CBOE, says, hey, we just sold that short that you sent over. And they'll say, okay, well, I'm sending over a long, one triggers the other, so it triggers a long order. Tasty does 4 for some people, does 15 for others. They're going to go to 20 or 30, I think. I think they're going to 40 next week. So, all right, the 390 rule is about 390 orders and not trades a day. That's true. So if you're putting on multiple orders, I put on orders about every 7 seconds, but I'm still trading. The way they track it is by the put credit spread just counts as one order. So it's not a matter of legs. It is a matter of orders. And you need to talk to your broker about how they track it because each broker is different. And it is a self-reporting rule. The SEC goes by whatever the broker says. So limit on stocks is okay. Yes, Maria just handed me a note and she's 100% right. Oh, it was. I'm sorry. I didn't see. Limit order on stock. Yeah, limit order on stocks are fine.
Read the question. It's about slippage.
The short slip. Yeah. On stocks, this limit orders are great. You're 100% right. Maria's 100% right. This is why you should always listen to Maria in the chat room because I am scanning through, but not really reading the chat room. I got too much going on at once, and I apologize for that. And that's what your face should be when you find out that I don't read the chat room that much. Maria reads it very closely. And when she's here with me, she also reads it very closely. So anything else I should talk about?
No, it's the week.
The week. Okay. Yes. So the week this week, let's just so you know, we got the FMOC meeting. Monday's got retail sales, which actually is a pretty good thing to know about. Housing data is going to come out on Tuesday. For the FMOC meeting, when he starts talking, the way this works is the minutes come out at 2 o'clock, and they're going to drive the market one way or the other. Powell starts his speech at 2:30 for the first 5 minutes. He has to read those minutes and talk about it. Then he starts taking questions, and that's when he loves to stick it to Trump. And December 18th of 2024, they said, oh, we're not going to, we're going to be lowering the rates soon, whatever. And he spent 45 minutes talking about how it was possible that they might raise the rates. It was absolutely not possible. He was absolutely lying. He was just trying to stick it to Trump, which he did, and he drove the market down into the toilet. And he does this routinely. I don't blame him. How would you like it if every single question is, well, what are you going to do when Trump fires you? He can't fire me. No more questions about Trump. Okay, well, we have another question for you. Sure, what's that question? How's your wife feel about Trump firing you? I mean, it's got to be a burden to him. Of course he gets pissed. And so what happens is the minutes come out, the market goes up or one direction. He starts talking, the market goes the other direction. So what I like to do, if I'm going to trade it at all in a small amount, is whatever direction it goes in the first, as the minutes come out in the first half hour, as we're waiting for him to start talking at 2:30, then I go the other way. I sell a put or a call going the other way. And then I just close it out in 10, 15 minutes. And that pays, it buys you dinner. So it's a pretty good deal. Thursday is the first initial jobless claims. And this is pretty good. This is how many people filed for unemployment benefits during the week. That actually is an important number. And then Friday is not too much. But stick with us at 3:25. Maria will go over all the numbers on a daily basis. Pardon me. I'm going to call it a day here. Thank you very much. No, the broker doesn't. The broker just holds on OCO order. The broker just holds the long, right? Now, I also close the long manually. So let's say that I make 100. I close my $1 million account. And my other accounts, I have other personal accounts, or not personal accounts, but other accounts I trade. All of them are held. All the longs are held at the broker. And because they have that OTO rule that's limited, like 15 or 40 or whatever it is, I will sell the longs manually. And what I used to wait and try to play them as a lottery ticket, and I back tested it, and it's better to just get out. So what I do, I'll just show you what I do. It's really easy to do. Is if you're trading, let's go to Tasty. If you're trading, let's say that this is the SPX, right? And you've got a whole bunch of these on. If you go down here, you're going to see all your shorts, right? All your longs, right? And so what you do is you just put this number here, and it will tell you if the buying power is under like $500, it's a credit, then it's okay to sell. You don't have to add them all up or calculate it. And if you can't do it on the put side, then you just go over to the call side and you do it on the call side. You go down to your longs and you just say make it red, which is a sell, and then you see if it's a small number there, and it's easy to get rid of them. And you can pick up an extra $5 or $10 on every single one, and you do that 10,000 times during the year for $10. It's pretty good. It's pretty good money. So, all right, thank you guys very much. Futures and index options. So they pretty much have everything now. Future. Oh, they do. Oh, that's great. Do they have index? They have futures on. I didn't know that they had options on futures, but it makes sense. Like I said, I'm a big fan of Hood. I'm a big fan of Hood. And what I see happening, why I like him so much, is my 30-year-old is in love with him, right? And there's a lot of 30-year-olds that are coming into money, and they got the predictive market thing. They're out in front, right? And it's the TikTok, the telephone technology. I got a bunch of grandkids and kids, and Thanksgiving dinner, the most important thing is what are we having for dinner, and where's the nearest plug? Do you have any chargers, Grandpa? I need a charger. And I swear they're texting each other. It's amazing to me. It's mind-blowing. But Robinhood leverages that, and I think that their long-term outlook is very good. They're very, very progressive, and I like that. I like what they're doing. I think that's a great company. All right. Thank you very much. Sorry to drag on so long. I promised we'd be out by 4:30, and look at it. It's like 5:20. So thanks a lot. I'll see you. Be sure, remember, 1325. Type in attic in any one of my videos, and I will get back to you for sure within 24 hours, maybe within 4 minutes. Talk to you later.